Hello traders and welcome to another video review. Today is Wednesday, November 8, 2023. Let's take a look at the Forex economic calendar today. Some minor data had been published overnight in form of the building approvals from the Australia and the inflation expectations from the New Zealand. However, the key data are German CPI, which is at the level of 0%, which is in line with the forecast, and less than previous reading of 0.3%. And then we are still waiting for the German 10-year Bund auction scheduled for release at 10:30. In the meantime, we got some comments from the ECB lane, and then we have some comments from the Bank of England Governor Bailey. At 11 o'clock, retail sales from the Eurozone is scheduled for release, and the Eurogroup meeting will start as well. During the New York session, we got the speech from the Jerome Powell, scheduled for release at 3:15, and building permits from Canada scheduled for release at 2:30. The crude oil inventories data release are scheduled for 4:30, and this is the most important data release during the New York session. We of course have the other data scheduled for release as well. 5:30 we got the Atlanta Fed GDP now data for the fourth quarter. And then we got the FOMC member Williams to give a speech just after the 7 o'clock. So pretty intense day, with German CPI data as the most important event of the London session, and the Fed speech and crude oil inventories are the most important event during the New York session. So let's just switch to some charts. Let's start the technical part, and we are going to start the technical part with the euro dollar, just because the German CPI data affected the market. So let's just take a look at the euro dollar, and we can easily see that the euro dollar is still trading inside of this channel, the blue channel that you have on the chart, and the CPI data of course triggered some kind of a movement to the downside. The intraday technical resistance is 1.0705, and the support comes at the level of 1.0665, just above the old technical support. In case of a breakout lower, we can still see this orange trend line. This trend line is of course the intraday trend line, and it will act as the technical support for the bulls. Then of course we got the middle of the channel, and just below it there is a 100 period moving average. Right now it's located at 1.0624, and just below this level is that intraday support 1.0611. Momentum is coming off the extremely overbought conditions, just hit the level of 50, so the momentum is neutral, but with any breakout below yesterday's low at 1.0665, the momentum would enter the negative territory, so the bears will be in total control of the market, at least in the short term, and we should expect another movement to the downside in momentum, and there is plenty of room to move on the chart as well. So all of this technical support should be on the chart, should be notified very carefully, especially the lower level of the technical supports, like 1.0522, 1.0518. Okay, so that was the euro dollar. There is another data release from the crude oil inventories. Okay, so what we got on the 4-hour chart of the crude oil. So what do we see here is the ABC correction to the downside. It looks like this this wedge pattern that we've been counting on didn't actually work out as we wanted, because the market accelerated lower faster. So it looks like this C wave is still in development. So let me just move it rather nicely, and we can of course do right now some sort of the Fibonacci projections, because we got the length of the wave A down towards here, and the length of the wave B. So 1-to-1 Fibonacci retracement, Fibonacci projection is located just roughly here. Okay, so the 1-to-1 has been hit at the level of 77.37. The local low so far, let me just move this C wave. The local low so far was hit at 76.38, so we are $1 below the geometrical levels based on the Fibonacci measurements, 1-to-1, 100%, right? So maybe the other measurement will be quite accurate, and the other measurement is 168%, which is located way below because it's located at 69.06. So in a case of the extreme extension to the downside, we might see this level as well. Nevertheless, please notice the fact that market conditions are extremely oversold right now on a 4-hour chart. So if we zoom in, we can clearly see that we got pin bar at the top at the end of the move here. And then, of course, this technical resistance has been rejected for now. But if in case of a breakout higher, we might see some kind of a pullback, and the wave C will be completed. Okay. If we switch to the daily time frame chart just for a minute, we can see that very big, almost like a Marubozu candle has been made on this chart. So let me just remove the Fibonacci's and stuff so we can see it clearly. There you go. Almost Marubozu like candle was made yesterday, which means the bearish pressure is still strong, and there's still a little bit of the room to move lower. Okay, so it looks like the market might want to move even lower, but the next technical support is quite hard to find because it's not that obvious to see this technical support. Maybe roughly the level of 75.03 should be used as the technical support, or just a zone located between the 75.03 and let's say 73.84. All right, so this more likely looks like a next target for the bears if this movement here is so strong. Any retracement here on a daily time frame chart? I don't think so, because it looks like we might just broke below the level of 50. Okay, we got this big swing to the upside, and now there you go, we broke below the level of 50. Now the next target is 61%, which is 75.72. So that's the next target for the bears during this very powerful movement to the downside. So that was the crude oil. Let's just take a look at the gold market. As you can see, the gold market on the daily time frame chart at least has hit the target of the $2,000. Nevertheless, it doesn't want to move any higher for now, at least. So after the 11% of the gain, we got the double top here, and the market is moving lower. We broke below this short-term trend line support, so we got this line broken, and we are approaching the key technical support for this level, 1946, 1955. So this is like a $10 zone here, and a breakout below this level would like to result in a further sell-off of the gold. On the other hand, we got the extremely oversold conditions on the 4-hour chart, so there is a possibility of a bounce higher. Nevertheless, if we come back to the daily time frame chart, we can clearly see that there's plenty of room to the downside, but the momentum is still positive. 55 points, maybe not that strong, but still positive. So if we want to see some kind of a bullish movement, it's of course possible. However, again, the current situation with the technical supports cannot be violated, cannot be cannot be broken, right? So the levels of 1952 and 1946 must act as the technical support and provide the support and hold the bearish pressure, and then of course the uptrend might be resumed above the level of 2008. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.